Good evening, everybody. Well, we had the kind of suspected market turn. So with that, we're going to combine what we've been kind of promoting this past week is the day trade entries, or more so the day trade entries that are excellent also for swing traders, but it gives you just kind of a much stronger, what do I want to say, trading platform to get into the right trades at the right time. So as we have seen, there's been this wedge formation that's been forming in the Dow now for the last few months, but we can see that over the last few weeks, this indecisive trading had a hard time getting up through that level. Now remember what the Japanese traders always kind of convey, that when you start seeing indecision, and that's the ultimate indecision is the doji, but the same analysis is applied to when you start seeing this type of action. It means they don't know which way they want to go, and when you start seeing that indecision, that's when you start looking for a change of investor sentiment. Now, at least we had a good trading strategy that if it kept moving up and went up through this level, well, that would give us one piece of information. The fact that they did a bearish harami and started selling it off gave us another piece of information. One, that we're still in this sideways mode, and two, we're in the sideways mode until they either break out through the lower uptrending channel or the upper downtrending channel. So that's pretty obvious. Now, when it becomes obvious, it's obvious because there's tons of people watching to see what's happening at these levels. We've got a little bit better insight as to what's happening based upon what the signals are at those levels. So is this just a pullback in the wedge, or is there true selling starting to occur? Well, remember, we don't have to just take one index as our indicator. Notice the other things that we are constantly aware of as far as candlestick signals. Today, the NASDAQ gapped down below the previous day's open, tried to trade up most of the day, but at the end of the day, they closed it back down. So there's just a very simple analysis. If they're gapping down below the previous day's open and staying down there by the end of the day, that means that's a strong bearish implication. Add that to the fact that the S&P 500 did the same thing, opened and tried to take it back up. But remember what we needed to see to tell us the uptrend was still in progress. We needed to see them close it back up here. The fact that they brought it back down told us that initial reaction of selling was the overpowering indicator. So what's that kind of setting up for? Well, this is what we're going to be going through in our full day training here on Saturday. We know what a flutter kicker signal looks like. It's a bearish candle followed by a gap up, and then it does a doji. And we know the doji rule. If it opens positive after a doji, the probabilities are extremely strong and it's going to trade positive. So this just becomes an alert to say, all right, if it opens positive, we don't have to have that what if hesitancy. Well, what if it opens positive and turns right around and goes the other way? It could always do that. But the probabilities say if it opens positive and starts trading positive, it's going to trade positive. That's the whole point of analyzing what these signals are telling us. So it works just as effectively on the bearish side. There's our bullish candle, gapped down and did a doji. If it opens lower tomorrow, you don't have to even think about it. You can start going short because where do you think the next likely target is going to be? Right back down here to the 50. Could it do it in one day? Pretty much, because there's a lot of selling pressure. Now, this is where knowing what should happen based upon a lower open or that strong selling force allows you to make trading decisions that are immediate. This afternoon, based on that potential of a bearish flutter kicker that could take you all the way down here, we suggested in the options room to buy the February 42.5s that were trading at 11 cents. Now, they're going to expire tomorrow afternoon. But the risk-reward factor was, if this did open lower and start trading lower, they could take this all the way down to this level or change that 11-cent option into about a $1.20 option. So this is the advantage we have of knowing exactly what might happen based upon how they open after the signal or the potential signal setup. That's where you get rid of that hesitancy and say, well, if they open this lower. So not only did we buy the Februaries, we bought some Marches also, but that doesn't mean this trade should have been done here. If this opens lower tomorrow, you can still look at buying some puts to the downside. So the reason I'm pointing this out is the big money is made by knowing exactly what should happen after a candlestick signal. A bearish flutter kicker signal is so easy to identify. It's that bullish candle followed by a gap down doji, and then the doji rule says it's going to move in the direction how they open after a doji. If we know which signals are the most powerful when we know the direction of the market, we can take something like SWI that did a bearish best friend, which is a lot of force to the downside, but if this market opens up weaker tomorrow, you could be shorting this immediately. Whether you're a day trader or a swing trader, the probabilities are pretty strong that that downtrend is going to be continuing. We also know that if you're in a downtrend and you see something like this, that tells you the bulls tried to take it back up, but they failed. And when everybody sees they failed and it opens lower the next day, there you got kind of your doji, bearish doji sandwich. So we saw that same type of thing occur in TSEM today, where it closed down here after hours. If this opens lower tomorrow, very strong put trade or a short trade on this one. So what we're looking for is, if we think the market is heading lower, based upon what the signals are telling us, we want to find the strongest bearish signals. Your bearish kicker signal. Look where it gapped down from. The 200-day moving average traded up, gapped down not only through the T line, through the 34, but couldn't even close, show support on the 50. If this opens lower, it's going to head down. Now, is it going to have another big day? Who knows? But at least you know you're going to be in the right direction if it opens lower. AMPL, bearish kicker signal. If it opens lower, where do you think the next logical target is going to be? Down here to the 50. So what's everything that's adding up on this one? A bearish kicker signal, number one. Number two, close back below the T line. 3, below the 200. The stochastic's heading down. If the market's heading down, whatever made them sell this, which I'm guessing was earnings, there's going to be more follow through. Toast. The bigger this gap down, the higher the pressure is going to be to the downside. So all this information is reoccurring because of human nature working the same way time after time. So if I can see something like this, this is what I call 2+2 analysis. Look how this gap down below the previous day's open. What did it tell us about the T line? Well, they're not going through the T line. What's it tell us if they open this lower tomorrow? We've got a bearish doji sandwich that told us that we were failing at the T-line and the 50. And if it trades lower, what do we expect from a bearish flutter kicker signal? More downside. And if it's more downside, what type of pattern is it setting up for us? Our bearish J-hook pattern telling us we've got more downside. So whether you're a day trader, a swing trader, an options trader, no matter what, a lower open tomorrow gives you an extremely high probability that you're heading down. And what was the indication of that? The fact that they gapped it down below today's open and couldn't get back up through that level or close back up through that level. All right, so this is kind of our promo. Saturday, we're going to be doing a full day training. There is 9 candlestick signals and patterns that produce extremely high probability entry strategies, not only for the day trader, but for the swing trader. And what this does is not only makes you recognize what's likely to happen after a specific signal or pattern, but it takes that hesitancy out of your trading. That it allows an investor to get in immediately when it's working, because way too often, until somebody becomes confident that the signals are going to do what they have normally done for the last 400 years, a lot of people say, oh, when I get in, oh, I can't make very much money, and it seems it's already on its way. Well, that's what you weren't trying to eliminate, is getting into a position that's already moving or moved. 9. Oh, no, we're talking about 2 different things, SP. There's the 12 major signals, but there's 12 major combination signals and patterns that produce extremely, the signals are producing the reversals. What we're going to be identifying is the price moves that have an extremely high probability of moving in the right direction when they show confirmation. So it's kind of a different category. Yes, if you can't make it, you can just sign up, buy the recording. It will be sent to everybody that's signed up, whether you can make it or not. Maybe not, Travis, but it's, again, not oriented to strictly day traders, because it kind of, what do I want to say, enhances the day trader's probabilities, but it also enhances the entry and exit strategies on signals and patterns, whether you're a swing trader or even a longer-term investor. Just gives you some insights as to what should happen based upon candlestick signals and patterns. So anyways, it's advertised to go from 10 to 2, which is a bunch of poppycock. We never get done before 3:30, 4:30. And I always put out a warning that when we start that session, you're going to see a lot of charts, and they're going to be repetitious. But the whole point of candlestick analysis is identifying signals and patterns. So anyways, join us Saturday. Becky, do you have the link to throw in? Michael, that's also kind of the analysis. When you can analyze what the market trend is doing or not doing, so if the market's not moving in any great direction and you still see some strong buy setups, maybe you're not going to stay in it for more than a day or 2. So obviously, let's get to the live charts. Live charts. If you're in a market condition like this, remember, you're trading based upon what the market is telling you. And with candlestick signals and patterns, it's telling you different things. Right here, it's telling you we're sideways. Right here, told you you had potential uptrend. So it ran into the top resistance. Here, So you were in a downtrend until you saw the support level. Overall, what's the overall market trend telling you? Well, that would have been good places. Get this. That would have been an excellent place to be buying on a trend move. Right now, what's the market telling you? It's going sideways. So you probably want to change up your strategy a little bit, saying, well, I can't hold on to anything very long because after 2, 3, 5 days at most, it's turning around. Bill, and that's always what you can do is if we'll show some examples of that here. Oh, I didn't want to do that. All right, so because of the gap down in the indexes, this is why we know what investor sentiment is doing based upon the candlestick signals or patterns. When they gap down today, basically because of the PPI numbers, that told you there could have possibly be a change of investor sentiment. Well, it kept coming back up, so it didn't look too bad until near the end of the day. Everybody was deciding that it's not as good as we think. So that alone just tells us we should be looking at things that are starting to head down. Now, does that mean everything? No, because we've got a very simple trading rule. But as long as you see a buy signal, a breakout, you can stay long as it stays above the T-line. So we're holding on to BOR. We're holding on to VRTX. No, not that. VKTX. Because what's our simple trading rule? Look at your fry pan bottom, our fry pan bottom rule. We stay long until we see a sell signal. Can we get the signals? See the look of it, a name from your website for the 12 you like. Faye, I think there's a link there where you can find the 12 major signals. We also have training videos that show the 12 major signals, the 6 or 8 high profit patterns, like a fry pan bottom, like our J-hook patterns. So the basis of candlestick analysis is that prices move the same ways time after time because human nature reacts, or it reacts the same way time after time. So we know what the expectation is coming out of a fry pan bottom, a strong price move. We know what the expectation is coming out of a J-hook pattern, a strong price move. We know what our strongest. Now, a lot of people say, which ones are the strongest of the 12? The 12 are already cultivated down from the, thank you, Jim. Yeah, there's a link to the 12 major signals. They're already cultivated down from the 50 or 60 candlestick signals in the candlestick universe. Now, the reason it's whittled down to 12 is because I tell people don't spend your mental time and energy trying to learn the other 50 or 60. Because they don't occur often enough to waste your time. If you just learn the 12 major signals, 6 longs and 6 shorts, you're going to have the same grasp of what's going on in price movement as somebody that's been trading the market for 50 years. I'll always reiterate every time I do one of these sessions that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So no matter what type of trading strategy you're using, if you overlay candlestick charts on that and put the additional evidence of what's going on in investor sentiment on top of what you're using, you greatly enhance your ability to analyze what's going on in that price trend. All right, I'm getting off topic here. So we do have good charts, and it's got a very simple rule that if you see a pattern breakout, like a fry pan bottom, you just stay long until you see a sell signal to close below the T line. Now, the reason that is important is because most of us, our emotions are our worst enemy. And I can tell you from the voice of experience that if I was ever lucky enough before candlesticks came along to be in a bullish trade, what was my biggest fear? Boy, I better take profits, because I would look pretty stupid if I let this turn around and go to a loss after I had a profit. So let's take profits just because it's time to take profits. That's a stupid way to trade. If we know what the parameters are that continue the bullish uptrend, which in this case is the T-line, the 8 exponential moving average, that has natural support and resistance level aspects to it of human nature, very simple. If you see a candlestick bias pattern, which is the graphics of investor sentiment, and we know the T-line acts like a natural support and resistance level of human nature, when you combine those two, now your emotions are now pretty much eliminated from your trading. So we can stay long in situations where we can see the pattern, J-hook pattern, as long as it stays above the T-line, like in DraftKings. On the other hand, we know what tells us it's time to be out of a trade, even though it might have come after a good, strong signal. Well, there's your fry pan bottom. There's your kicker signal breakout. What were we expecting from this point? At least a 45-degree. But what did this little signal tell us today? Well, remember, anytime we see we're up in the overbought area and they're gapping down below the previous day's open and closing below that level, they've taken the wind out of the sails, close out the position and go find a better trade. Fry pan bottom, is that what used to be called the Q with the handle breakout? Wallace, I have no idea what that means. No, a fry pan bottom, remember, it's not what used to be, a cup and handle. Oh, cup and handle, okay. No, a cup and handle looks like this. Comes up, dips, and goes up again. We call that the classic pattern. The classic pattern looks like this. There's your fry pan bottom. Now, a cup and handle would be this, then a pullback, and then up. The classic pattern is a fry pan bottom. And what do we expect coming out of a fry pan bottom? A strong price move. What usually happens after a strong price move? Some profit taking. Now, do we know this profit taking is going to be pulling back to here or just pulling back to here? Now, we've got a very solid indicator, the T-line. They pull back and they can't even close below the T-line and you start seeing new buying. Now we know we have the classic pattern, which is a fry pan bottom, strong price move. And the prerequisite for a J-hook pattern is a strong price move with a pullback and then starts back up. So if we took profits here, it used to be, if I happened to be lucky enough to be in a trade or a position where I took profits and they pulled back and started back up, my first thought was, boy, they are not going to trick me and get me back in and then turn around and take my profits, whoever they may be. Well, now I've learned what human nature patterns usually create. So if I close here, I don't mind buying back here because I can see what pattern is setting up. Is volume or unbalanced volume? No. We've already eliminated the volume, or I have, because my trading universe out of the 9,500 trading entities is that I don't want any positions that trade less than on an average of 200,000 shares a day. There's two reasons for that. One, if I'm making a decision, I want to get out of a position, I don't want to have to sit around for 3, 5, 10, 20, 30 minutes to get that position filled. I want to close it and move on to something else. Secondly, the bigger the volume, the more fluid, more quickly your candlestick signals and patterns are going to set up. Now I say more fluid. This could be a 10-minute chart. This could be a 5-minute chart, a daily chart, a monthly chart. Candlestick charts look all the same on all time frames. Are these all retail traders? No. We don't know who all the, meaning any price move, we don't know who the traders are. We don't care. We're not, a lot of people say, oh, it's the amateurs buy in the morning and the professionals buy later in the day. We don't care whether it's somebody's grandmother buying. As long as the price is going up, that's what we're in the trade for, is to make a profit on that trade. So whoever's buying, it doesn't matter. So again, volume doesn't matter because we've already eliminated it. Now, if we happen to see on a day like today, or like there, that all of a sudden there's a big volume spike, well, that just becomes an extra added fluff to say, well, there's been a major change of ownership. So what usually happens at the bottom from what the rice traders profess? Where do most people sell? They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. The graphics of candlesticks will tell you when that's going on, and just a big volume spike kind of enhances that. Does the course come in with recording? Yes. All our training is recorded. The only disadvantage you have is if you had a question while we're looking at something, obviously, if you're not there, you can always say, I was looking at the XYZ chart and it was showing this. Could you tell me, explain that better? So you might have to email me. Now, everybody's invited for our chat rooms on our website with a 2-day or 2-week free trial. And the reason for that is I call that the horseradish marketing. Call it the horseradish marketing because growing up here in Pittsburgh, we had Heinz Food. I never paid attention to it because it was just a big old stodgy food company. But then when I learned the history of Heinz at the age of 12, he knew enough that because their product had good quality, much better quality than the horseradish that was marketed in those days, he would, and back then they used to use a green bottle to bottle horseradish. Well, he made a clear bottle so everybody could see the quality of his product. And then on top of that, when he took it around to grocers, he'd let them all taste it. So they became convinced that it worked well. So that's why we call this horseradish marketing, because candlesticks work extremely well. If they didn't, we wouldn't be looking at them 400 years later. And they work off of one simple premise, that human nature works the same way time after time. All we have to do is learn what those patterns are telling us. Are you selecting stock of us based on at or no? We're not trading the moving averages. Let me get to a chart that has all the moving averages. Here are the moving averages on these charts for those folks that are new. We've got the red line, which is the 200-day simple moving average. The blue line is the 50-day simple moving average. The reason we have those on our charts is because every major money manager around the world uses those moving averages to make their decisions. Thank you, Mike. That's my modus operandi. Is I would rather give people much more than their money's worth. And a lot of people tell me, well, you're not charging enough. I've got a little dirty secret. The more people I train how to effectively identify signals and patterns, I make as much money, if not tons more, of people in the chat room that say, hey, look at XYZ. Is that a good pattern setup? And if I look at it and say, yeah, that's a great pattern setup, I make as much money with what other people have identified because they're starting to look for those signals and patterns. Don't charge more? All right. Michael, I'm sure that when you become rich, you will send me a big Christmas bonus. Now I forgot what I was saying. Moving averages. So a lot of people say, well, isn't the exponential moving averages much better? We're not using those moving averages to make our decisions. We're using those moving averages to see what everybody else's decisions are at those levels. Do we get to charge by the post? DJ, I don't know what that means. We also have the 34 EMA on here, which works reasonably well. So the nice thing about candlestick charts is that you could take everything off this chart and just use the candlestick signals. That's what the Japanese rice traders did. We have a few additional indicators because of computer analysis that we can put on stochastics. So the simple logic is if you see a candlestick buy signal in the oversold area, you can, you're probably going to see a reversal. You see a candlestick sell signal in the overbought area, you're probably going to see a reversal. A candlestick buy signal in the overbought area doesn't mean anything. A candlestick sell signal in the oversold area doesn't mean anything. We also have the T-line. Now I could take everything off this chart and just use the signal and the T-line because the most important factor on a candlestick chart is the signal itself. And the T-line will tell you how long you can hold on to this position. Now, when I said you could buy on a candlestick buy signal to close above the T-line and stay long until you see a candlestick sell signal and it close back below the T-line, there's a caveat to that. Because the T-line is a natural support and resistance level of human nature, there's another aspect to it, which is the further away you move from the T-line, the higher the probability it's going to come back and test it. So that becomes an additional confirmation that if you start seeing sell signals that aren't confirming yet, and this isn't the best chart to illustrate that. I don't know what. But if you see a candlestick sell signal or the makeup of a candlestick sell signal way above the T-line, that tells you that's a better time to take profits. They'll find something. But again, what you're looking for is the candlestick buy signals. Notice your kicker type signal. May have closed it out here, but then there's your kicker signal to get back in. That's on Netflix. This evening's webinar has a record-breaking attendance, which is significant. Raw, yeah, we usually get a good crowd on Thursday nights. I was just telling the marketing people at Interactive Brokers, which was starting to do programs for them, that when I started doing this back in the, I hate to think this was back in the 80s, maybe the early 90s, they would have auditoriums full of 300-400 people. Well, we thought that was good. We didn't know that was great back then. But anyways, and the reason that I've discovered or find out from a lot of the marketing people in different websites is they don't have the crowds they used to. But we keep getting good crowds here because everything we teach is just common sense put into a graphic depiction. You don't have to learn numbers. You don't have to have difficult confirmations. It's all just kind of common sense. Oh, I'm getting way off track here. So Netflix, let's even take a look at this chart today. If you had been thinking about going long, the fact that they gapped it down below yesterday's open and went or closed down here told you we aren't in an uptrend, we're in a downtrend. And one of the simple realities is if there's your bobble breakout, a very high probability trade, that it's going to head higher. How higher, we don't know. But where was the place to be out of this trade? Logic says if you're in the overbought area and they come back down through the open of the previous day's candle, that means the bears are in control. And if the bears are in control, where do you think they're likely to take it to? back to the T-line. That's a good place to put your stop. Dan, only in the short-term sense. Again, these type of market conditions, with it moving like this, there wasn't a trade out there, or very few trades out there, that you could get into and want to stay in for more than 2, 3, 4 days. So now that becomes, what is the nature of the market telling us? Now, something like this, if I'm buying, whoops, let me find. If I'm buying, oh, here's a good example. I love this example. If I'm buying, obviously, my day trades are going to be less prevalent. I'm probably going to be more in swing trades in different stocks. But here's a perfect example of candlestick signals relevancy. Notice this day right here. That was a nice up day in the oversold condition, but that is not a signal. That's just an up day. Now, why is that significant? Because the Japanese race traders have had 400 years to analyze what happens in price movements. If this was a signal that had any relevance as far as the change of investor sentiment, they would have told us what it was and described what it was, or explained how it was formed. But in all the literature from Japanese race traders over the last 400 years, that's not a signal. Now that is a signal. That's your bullish engulfing, more specific, your left-right combo, because that's a doji followed by a bullish engulfing. So that's a perfect illustration to say if this is not a reversal signal, it probably doesn't have the magnitude of strength. If that is the signal, that's what causes the next price move. So that got off topic again, didn't I? So this nature of this market says, well, I don't want to be long or short for very long, so maybe I should just be hitting some quick trades. Does the course cover day trade setups only on stocks, or is options of these setups covered as well? It's not the point of whether it's just for stocks. Remember, the stocks are just the fodder for an option trade. So as I just mentioned on Shopify, we can see this is a bearish flutter kicker setup. And knowing that that was the setup, we started buying some puts on the close. We did some very high risk trades, but the probability factor was that at 11 cents, if this came all the way down to the 50, which it has the capability of doing based on that signal, that 11 cents could go to $1.20. Yeah, the commissions, somebody asking about commissions. Commissions are so minimal at this point. That's just part of the playing field. You don't even take those into consideration. So what we're going to be covering as I say, there's 10 what I want to call high probability day trade setups. JQ, yeah. But what I've discovered is if you don't have a $25,000 account and you want to day trade, what I do would be you buy you buy one set of options, whether it's the strike price or the execution date, and if that trade works out, the next day you take your profits, but then you want to get back in. Well, if you get back in, it's a day trade, except if you move to a different strike price or a different execution date, expiration date. It's not a day trade. So what we're going to be showing three elements of day trading. One, the 9 patterns that work extremely well, number one. Number two, what to do once that trade is working, because then you flip to your 10-minute chart. I don't know if I've got any. And then you trade off your 10-minute chart until you see a sell signal. You take your profits. And then the third one is you see a big breakout move. When do you know when to buy? And again, that's where you kick into your 10-minute chart. You still have settlement rules. I don't know what that means, JQ. You're talking about, oh, darn, can't think of the name right now. Oops, let me get moving along here. We'll be here until the cows come home. So things like Tesla. You can see when it came out of this fry pan bottom, you could hold onto this as long as it didn't close below the T-line. However, look what happened today. You started seeing sell signals. I'm going to make this bigger. And then you had another hanging man sell signal. Did it close below the T-line? No, but if I was long on this and I saw the market start rolling over, I would probably at this point take profits and go on to something else. Yeah, and you could trade futures. Because I'm sitting here all day, I don't trade as actively as I used to. But even on hogs, you had a sell signal. Notice how long you could stay short in hogs. So you saw a buy signal and close back up above the T-line. Now what would you do with hogs? Nothing, moving sideways. So you can trade all sorts of things on an intraday basis. Bah. Well, for crying out loud. C.S. No, F.S. So we also look at trading futures. Would you be trading soybeans right now? Not really. It's moving sideways. We're looking for stuff that's trending. Okay, let me go on here. So on the bullish side, well. Look at the big breakout, left-right combo. But notice how we can use everything everybody else is watching. Like, where would be a resistance level? Pretty much right up through the tops. So if I was going long today and it closed back here, I'd close out the trade. Because that told me they didn't break out through this level, even though I had a strong buy signal. So essentially what we're doing is using everything else that everybody else is watching and seeing what type of signals occur at those levels. Now, why did I have this on here? Unless after hours they took this way back up. Let me see if... So there was a big breakout move from Iridium. So how do we add everything up on this chart? Well, they bounced smack dab off the 50. They reversed and came up through the T-line, did kind of a confirmation of the doji. So if I was going to buy this tomorrow, where would my probabilities occur at the best time? It traded back up through today's high. it's telling us they're breaking out through this level with a strong buy signal. So a lot of people say, well, didn't you miss out on some profits? I would rather be in a correct trade with less profits and much better probabilities that I'm going to make money. I'm more interested in the correct trade aspect than the profitability of each trade, because if I can make constant correct trades, the compounding effect is huge. Oh, pshaw. So this is what we call your best friend signal. This is one of the ones we're going to be going into on the weekend. What are most people afraid of right here? They're afraid of chasing. So how do we go after this trade? Well, there's three ways. One, some of the scanning softwares have an automatic update to tell you which ones are moving the biggest. Two, forget what two is. Three is if you're sitting in the chat room and everybody's looking for the same type of signal, you say, well, look at CYH. It's gapping up. Well, it's doing what could be a best friend signal. So what's the simple technique from there? You flip to the 10-minute chart. Say, oh, I can be buying, I can be buying, I can be buying. When would you sell this? You probably wouldn't have all the way up because it really didn't do anything drastic below the T-line. Now, if this had turned around and started trading lower, yeah, that's when you would have taken your profits on a day trade. So again, this is not rocket science. This is just using the indicators that work extremely well based upon human nature. I probably had something earlier in the day for this one. So what was this chart telling us? Well, look where they, after a big uptrend, where did they pull it back to? And this is why candlestick signals are so relevant that show you what's happening at levels that everybody else is watching. As soon as it came back to the 50, a bullish Harami, a morning star signal, started trading up. What's that tell us about our probabilities? Probabilities are pretty strong. They let it pull back right to the support level, and that's where the buy signal started. So when we show the different, this is off the topic of day trading, but when we show the topic of high probability trade setups, where you might not want to have to learn a whole bunch of them all at one time, there's lots of them that you can learn. Say, oh, these are high probability trades. I'll just concentrate on those and maybe two or three others. So here's one that you had your bearish Harami confirmation, hit the 34, bounced up, and notice where it failed, right here at the T-line, and traded lower today. Notice what else it did today. It tried to come back up and failed right at the T-line. Now, why is that important? Because nobody has the T-line on their charts. So when they fail or they support at those levels, it's not because everybody said, no, it's supporting the T-line. They don't have that on their chart. That's why it is more convincing that it's a natural support and resistance level of human nature. But if we know this is a failure right here, what type of pattern is it setting up? Well, there's our bearish J-hook pattern. And where do you think the next likely target would be? Well, if this is wave 1 and wave 3 is about the same, they're going to come back down here and test these levels. Now, is that a big, huge percentage move? Maybe not, but that's where you can now start applying maybe an option spread where you're buying the 34 puts, I'm sorry, selling, buying the 34 puts and selling the, I forget. Anyway, you do a bearish put spread. So look what happened in Krispy Kreme today. Apparently earnings. Because this is where I say observe the obvious. What happens when they come up through a resistance level? They'll see if it's going to act as a support level. Look at our Morningstar signal, then our bullish flutter kicker signal. And what did our bullish flutter kicker signal indicate? Well, this was going to act as a support level. This was not acting as a resistance level. What's our anticipation from here? More upside. That was setting up as a J-hook pattern. This is what we call a J-hook plus. Notice, or even a bobble breakout. Notice how they came right up to the level everybody else was watching. And notice how when it pulled back, it was indecisive. And where did it pull back to? Right smack dab to the T-line and then came back up. Now, why is that relevant to us? Because we know this is a J-hook pattern. We call it a J-hook bobble breakout because what's everybody else watching? They're watching the 50-day moving average. And what's most investors, somebody even asked tonight, do you worry about the moving averages? No, but we know everybody else watches them. And what's the most, or what does everybody do when it goes up through a resistance level moving average? They start buying. We're buying early because we can tell that this is a pattern setup ready for the next price move. That would be a credit spread. No, that wouldn't even be a credit spread. So you'd be buying the 34 puts, and you'd be selling the 30s. That would give you a bearish put spread. All right, so there's a very high probability trade setup. Look at your big gap up consolidation. Once again, look where they consolidated to. Right smack dab to the T-line. Now, why do you think there's going to be more upside? Because that right there told you there was a new dynamic, a new bullish sentiment in this stock. So when it consolidated and it started back up, what's this telling you? That enthusiasm after the profit taking is now continuing. So where would be a good place to be buying something like this? Well, you can see they're supporting right here on the 50. There's a little hammer signal. There's a bullish engulfing signal. Very simple logic. If they start buying on positive trading tomorrow, what's it telling us about the T-line? They're not resisting anymore at the T-line that nobody can see. We know that if you see a buy signal and a close above the T-line, the prospects are now you're in an uptrend. So if I was buying on positive trading tomorrow, I know what know what to expect, a new price move, and I know where my stop loss would be. It closed back below the T-line, you close it out because remember our statistical probabilities. If it closes above the T-line, you're in an uptrend. If you close below the T-line, the bulls aren't there. All right, so we wanted to look for the best trade setups. Look at your hanging man in the overbought condition, that far away from the T-line, followed by a shooting star, followed by another shooting star, and then look at your doji sandwich. Doji sandwich tells you there's going to be more downside. So that's the combination you're looking for. far-fetched. Observe the obvious. You're up in the overbought condition. You just touch the 200-day moving average, and they sell it off doing a doji spinning top. What's the doji rule? It's going to move in the direction of how they open after a doji. So if it opened lower, you're closing out any long positions if you didn't close it out up here. And you can go short as soon as it starts trading below the T-line. So those are the type of things that you're looking for, and you're looking for the ones that have the strongest forces to the downside. The kicker signal is your strongest individual candlestick signal. Ring, the bigger the gap down, the more compelling there's going to be more downside. The bigger the gap down, the more compelling there's going to be more downside. Let's see, I thought Bill was one of those. And it just didn't move once it got down there. And we did toast earlier. Big bearish kicker signal. If we wake up tomorrow and we see the pre-market futures are showing the Dow's going to open down 170 points and the NASDAQ down 60, and this is opening lower, yeah, that becomes all your stars in alignment after that kicker signal, but they're going to keep taking this one down. So again, I always use the term, this is not rocket science. This is just using the indicators, bearish kicker signal on upwards. That tells us there's probably a lot more downside on weakness. Trip. Bearish kicker signal. Not a bearish kicker signal. This is what you call a bearish belt hold signal. Now, this takes into consideration all the elements of what happens in human nature. Where do most people buy? They buy exuberantly at the top. So if I was long and it gapped up here in the overbought area, well, the stochastic's heading down, and started trading up, where do I want to put a stop? Put a stop where it opened, because logic says if there's something good happening, it's going to go higher. If they start trading back down through, I hate that thing, trading back down through the open after gapping up, that tells us, oops, that's where the profit taking is occurring. And I want to take profits up here because we know that where most people buy, they buy exuberantly at the top. Then they gap it down today after that bearish signal. That tells you there's a lot of force yet to the downside on this one. As a matter of fact, you might see that one in the recommended list tonight. And this one again, 2 plus 2, if this opens lower, giving you a bearish flutter kicker signal, bearish J-hook pattern. Where's your next target? Wave 1, wave 2, wave 3 is likely to come down here and test this level, and there's a wee little teeny gap. A lot of people say, well, won't they come back and fill a gap? A lot of times they do. But they may not do it on this move. They may do it on this move. If we're buying on a gap up after a buy signal, we stay long until we see that sell signal and the close below the T-line. That was a big bearish divergence on the stochastics and trip. Yeah, but we're not trading stochastics. Remember, I should point out that on trip, on a kicker signal, what was our kicker signal? Ring. A kicker signal is so strong, it doesn't matter where you are in your stochastics. Remember, we said earlier that you want to see a candlestick buy signal in the oversold area or a candlestick sell signal in the overbought area. If you see a kicker signal, no matter where it is in the trend, it's telling you there's a dramatic change of investor sentiment. Whoops, I've already gone way past. Oh, whose handwriting is this? Another one. That's kind of giving you that bearish J-hook pattern. But this could have a lot more downside. if it breaks this level. So if you're in a downtrend and they start gapping it down, that's telling you there's a lot of force yet to the downside. So as long as we know, or kind of suspect, that this market, I don't even know what's happening after hours. Oops, they're even trading lower on the futures right now after hours, except that doesn't mean anything. This kind of gives us an indication. But if they open up this market, or we wake up tomorrow and they're showing that the pre-market futures are going to open the market down big, that's where you start going after not only stocks that are in a downtrend, but we want to find the ones that have the strongest downtrend potential. And that is from the kicker signal. All right. Okay. I guess that's about all I got. Yes, Saturday, again, you're going to get more than your money is worth. I guarantee that. Right now, we're up to 186 chart examples. And if you're lucky, we won't have any more than 250s, which means that's at least 5 hours. All right, are there any general questions on candlestick analysis? Go ahead, JQ. I hope this is something I can tell Sandy's 13-year-old granddaughter. You had to hand the salesman back his cardigan. Okay. Go short on price weakness, long on price strength. Wallace, if I saw anything that was, if this market opened up positive, yeah, you could go after some of the strong chart patterns. But right now, even if the market opened up positive and traded positive most of the day, what would be the direction of this market? Still sideways. So when you're in a sideways market, what you're looking for is the strongest bullish signals or the strongest bearish signals. Now remember, we want to still use the philosophy of the Japanese race traders that if you're seeing a constant indecision, that usually means there's a change coming. Hold on to your individual ones until I tell Jim to do the double line, which might be any second now. Will you close a position if before the end of the day, if it passes your buy point and the market is falling and downtrending? Yes. If if I had bought this one on the open and it went up and came back down through the open, what color would that candle start turning? That would be a red candle. And what would be the implication? Well, they opened it positive and there was a green candle that told you the bulls are in control. If they came back down through the open, that's telling you the bears are back in control. I want to be right back out of that trade. So another major advantage of candlestick analysis is where most people you hear through the ages or the sage advice of people telling you to cut your losses short and let your profits run, but they never tell you how to cut your losses short. There's some very simple stop loss procedures in candlestick analysis that tells you the trade didn't work, close out right away and move on to something better. Okay, I guess with that, Jim, let's go ahead and do the double line. And in 4.2 seconds, to the next double line. CVX. That's a bullish, or I'm sorry, a bearish flutter ticker signal. I would be shorting this one tomorrow on weakness if you want to play this one, because it would be doing a bearish J-hook pattern and more than likely not holding up at the 200. And why would that be indicated? Because that bearish flutter ticker signal is showing a lot of force to the downside. Uh-oh. Why is that? CNG. I don't know why that's not coming up. That's goofy. And this one doesn't come up over here. So let me do this real quick. CNG is not coming up over here. An ROIV, you can see where this got a lot of bullish support right here off the 50. Left-right combo, followed by a bullish engulfing. But now it's pulled back. It touched the T-line. At least now you have a game plan. But if this opens lower tomorrow and the market's down, starting to head down big, probably want to close it out. But you still watch to see what happens at the T-line. Remember, our basic rule is it's still in an uptrend as long as it stays above the T-line. But if the market's telling us a different story, just close it out and then wait to see if it supports at the T-line. You can always buy back in. And TRA, best friend gap up, look for a 45 degree. Now, you would look for a 45 degree based upon a decent market, a flat market, but if the market's selling off, you might be a little bit less aggressive if the market's not corresponding. KBR, same scenario. Best friend, to stay long on this or to go long on this, you want to see it open positive because it had a big move and profit taking. If it opens positive and starts trading positive, it tells you that profit taking is over. Myra, that's not good. This one would have been one if I was buying today or if I bought yesterday. When it came back down through today's open, I would have closed it out. Because what did that tell us about our uptrend? It's not there right now. MBD, Mongo. Mongo just a pawn in life. That's a nothing chart. Sideways. I'd be someplace else. Wouldn't be long or short. That's kind of a nothing chart. Pretty much sideways. Now, if I was going to buy this, I'd want to see a strong move breaking out to the upside. Oh, I don't know where that went. BNB. That's something you can go short on weakness. ATOM. You could short this one on weakness. But as a day trader, we'd be trailing the stop and not lose a day. But as a day trader, we'd be trailing the stop. That's one way to do it, yes. Or you use your, if this was my 10-minute chart and I bought this one during the day, what became my parameters? Well, I'm starting to see a sell signal in the overbought area. Maybe I start, and then it wouldn't gap down because it's intraday. But if it started trading lower, it tells me I'm too far away from the 10-minute T-line. It's time to take profit. So that's what we go through. There's some very obvious trading price moves of human nature, whether it's on a daily chart or on a 10-minute chart or a 5-minute chart. It just improves your probabilities that you're in at the right time and out at the right time and can move on to another trade. Dave and Buster's, that you get ready to short because of the failure. If this opens lower tomorrow, yeah, I definitely would not be long on this one. I'd probably be more apt to start going short, especially if it trades back down through today's open. ENPH, that big bearish belt hold was still indicating that this downtrend is still in progress. If you're short, stay short. PBF, that was kind of a failure. It's just slightly positive. And it came back through this level, telling me that if this opens lower tomorrow and I had gone long, I'm closing it out. Oh, buying positive, you could. You could buy this one on positive and then put your safety stop at today's close. JD.com, watch to see. If you were short, you'd covered your short. I wouldn't be going long until they see a confirmed buy above the T line. Well, 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 well. Well, 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 well. What's going on here? Daku held up reasonably well, but you can see when it got up through here, it failed. So if you're going to stay long, it has to open positive and trade positive. If it opens lower and starts trading lower, close it out, because that tells you you're still stuck in this sideways mode. Same scenario here. Well, this is an 80-cent stock. Make sure your volume is well over 1 million. What you want to see here is kind of on this scoop pattern. Better open positive and start trading positive. Palo Alto. Oops. If you were long and it closed right here at the previous day's open, that's not a good sign. Tells you if they open this lower tomorrow, close it out immediately. At least it's coming back to test the T-line. It might be coming back to test the 200 to see if it's still going to act as support. That, if this opens lower on kind of your bearish flutter kicker signal, pretty much telling you wave 1, wave 2, wave 3 of your J-hook pattern. And that's a little bit dicey. But if you were watching this and you were ready to buy on positive trading today, when it opened, and you can see that is a red candle, what was it telling you as soon as it opened? The bears were still there. You didn't want to be buying. You didn't want to be buying. You didn't want to be buying. Where would have been a good buy entry point? If it backed off and then came back up through that level, that would have confirmed that signal. Right now, I wouldn't be in this one. What the heck am I doing? How does it do that every time? Crocs, same scenario. As soon as it opened and started trading positive, who was in control? The bulls. As soon as it came back down through this level, who was in control? The bears. If you bought or you owned it today, now here would have been another example of look how far away you are from the T-line. When it was trading up here, I would have flipped to my 10-minute chart, said up, took it up big, fast. Where was a good place to take profits? As soon as it came back down through this level, because where do you think the next target was going to be? Back to the T-line. No, that's not an inverted hammer. That's more of a shooting star. Remember, an inverted hammer happens down here in the oversold area. Shooting stars happen up here in the overbought condition. So if this opens lower tomorrow, what's happening? You got a bearish flutter kicker signal, which is telling you there's going to be some good strong movement to the downside. Snow, I'd be out of this one. This now becomes a nothing chart. A very simple trading strategy or trading rule. If this is your pattern setting up where they pulled back and started back up, it has to get back up through this level. If you see a sell signal before it gets to that level, in this case you got a bearish kicker signal, close it out, because that means they're not going up anymore. That also tells all the other investors that are in this, it's not going up, let's close it out. That's what starts the downtrend. Planet Fitness, bearish kicker signal if this opens lower tomorrow. Failing at this level in the 50, you could go short. AMGN, stay short. There's your bearish J-hook pattern that couldn't hold up here. Look at your doji rule. It opened lower, which told you they weren't supporting here. Stay short on this one. Fill. Chipotle, same scenario. They didn't get back up. You had a bearish flutter kicker signal. Failing here at the T-line. Where do you think the next targets could be? Wave 1, wave 3. Okay. And QuantumScape had a big run-up before the earnings yesterday. So if you had bought long, wanted to see what it would do, they brought it right back to the 200. As a trade, if you stayed long, now it actually closed after hours right here. It closed during the hours here, and then after their earnings, which was negative 25 cents versus negative 21 cents, they took it down. However, look at the pattern. There's your bobble breakout. You can still be buying this. Now, we're recommending this one as a long-term hold because of the solid body lithium battery, which has so many more advantages than the existing lithium batteries. So the reason we're holding on to this one or buying this one for long-term is if they even announce that this could be, or they're getting close to their production or being able to produce those solid-state batteries, this may not be a $20 stock or a $40 stock or an $80 stock. This could be a $200 stock. GOEV, nothing to do here, just stay short. AVRO, AVRO. All right, now you watch, because there was your big price move. There was your dark cloud. And when they started pulling back, again, where do you think they were pulling back to? The T-line. Now you can get ready to buy this on positive trading. So if I was buying this one on positive trading tomorrow, I'd immediately set my stop at the T-line. Intel, and that's kind of a nothing chart. Not going anywhere. What is open doing? What is open doing? Faye, you got me there. What does that mean? Are you talking about the symbol open? That's a nothing chart. In the JB chart you showed, you said a long entry was thinkable if the open is up. There is a 200-day moving average just $5 higher than that. Is it worth entering with that nil spread? Is that on JB or JD? You're not trading the moving averages. You're trading the signal. So if this opened positive tomorrow, this gap up told you there's lots of buying. Now, that doesn't mean you disregard this. You just watch to see what happens when it gets to that level that everybody else is watching. But again, we're not buying or selling the moving averages. We're just using them to see what everybody else is doing at those levels. We're buying or selling the signals. B-Way, first thing you do on something like this is see what the news was that created that move. If it's something that's going to probably tell you there's more upside, then watch to see how they open this one. That's a good setup. You could be buying this one on positive trading again. See what the market in general is doing. AM doesn't come up over here. SB, it's once you see what is happening in price movements, it all becomes pretty simple. You can see here's a little scoop type pattern. But I wouldn't be buying this one until probably comes back up through this level, meaning above today's high. And Rivian, now why is that not coming up over here? Different chart sources have different. All right, so here's our overall market. If they open lower tomorrow, take a look at their stocks that have the best sell signals. All right, everybody. Hopefully see a bunch of you Saturday. If not, we'll see you bright and early tomorrow morning in the chat room. We'll see you then.